What if one simple payment choice could quietly cost you hundreds of extra dollars over the life of your insurance policy without changing your coverage at all? Most people spend hours comparing life insurance quotes, but almost nobody pays attention to how they're actually paying for the policy. And believe it or not, that decision alone could affect what you spend every single year. Some people choose monthly because it feels easier. Others pay annually because they want to save money. But which option is actually smarter? To answer that, we first need to understand something called payment frequency. Most insurance companies let you pay every month, every 3 months, every 6 months, or just once a year. The important thing is this: your life insurance coverage stays exactly the same. What changes is how much you might actually pay over the course of a year. Many insurance companies apply something called a modal factor, a small pricing adjustment that's built into monthly or quarterly payments. So even if your monthly payment looks small, 12 of those payments may actually cost more than paying once a year. So why would anyone still choose monthly payments? And when does paying annually actually make more sense? That's exactly what we'll uncover next. Let's start with the option most people choose, monthly payments. They're popular for one simple reason: they're easier to fit into almost any household budget. Instead of paying one large bill every year, you spread the cost across 12 smaller payments, making your monthly cash flow much easier to manage. If you receive a paycheck every week or every 2 weeks, monthly payments usually feel much more natural because they match the way money comes in. But convenience comes with a price. Monthly payments usually aren't simply 1/12 of your annual premium. Many insurance companies add small billing adjustments called modal factors. They're designed to cover administrative costs and the extra work like collecting payments every month. And there's another hidden risk. The more payments you make, the more opportunities there are for something to go wrong. A single missed payment doesn't always cancel your policy immediately, but it can create unnecessary stress, late notices, and in some cases even require reinstatement. So if monthly payments have extra costs and more chances for mistakes, why do millions of people still choose them? Because keeping your emergency savings intact can sometimes be more valuable than saving a few dollars on insurance. Now let's look at the other side of the equation: paying your premium just once a year. For many policyholders, annual payments are the least expensive way to buy exactly the same life insurance coverage. So if annual payments usually save money, why doesn't everyone choose them? The answer has everything to do with your personal finances, your cash flow, and what works best for your lifestyle. So now comes the most important question: which payment option is actually better for you? The truth is, there isn't one perfect answer. The best choice depends entirely on your financial habits, not just the insurance company's pricing. If paying one large bill would force you to dip into your emergency fund or worse, rely on a credit card, monthly payments are probably the smarter choice. But if you already have healthy savings and stable income, paying annually can reduce your total insurance costs and eliminate 11 extra payment events every year. And remember, fewer payment dates also mean fewer opportunities for missed drafts, expired cards, or banking issues. If paying an entire year upfront feels uncomfortable, don't think your only choices are monthly or annual. Many insurers also offer quarterly and semi-annual payment schedules. Quarterly and semi-annual payments can reduce the number of transactions while avoiding the financial pressure of one large annual bill. Before choosing any payment schedule, ask your insurer one important question: what will I actually pay over 12 months under each option? Also ask what happens if you miss a payment, how long the grace period lasts, and whether automatic bank drafts reduce fees or improve reliability. In the end, the cheapest payment option isn't always the smartest one. The best payment schedule is the one you can comfortably maintain year after year. If you're ready to compare life insurance quotes or need help finding the right payment plan, visit Quote Maestro today and let our licensed experts help you protect what matters most.